Well, Bitcoin just had its highest ever daily close and weekly close. It was seemingly shaking off the US credit downgrade by Moody's on Friday. However, the celebration was a bit short-lived for us. Right after we closed that weekly candle, we had a sharp snap back into the consolidation range. And these kinds of moves put me on edge a little bit. Both that run up on Sunday afternoon and the sharp pullback felt a bit suspicious. So today I'm going to take a deep dive into the Bitcoin TA, and I'm also going to share with you guys a secret on how I identify each breakout in a Bitcoin bull run and determine if we are still in the bull run. Crypto aside, stocks seem to follow suit today with the S&P 500 and NASDAQ, while opening lower, closed the day into fresh rebound highs. So are we going to see that pump continue, or should we expect maybe a 60 or 90 day slowdown like we saw in the two previous US credit downgrades? We're going to discuss all that, and because I've gotten so many requests for it, I'm going to do a trading education section specifically focused on pair trading, MicroStrategy, and Tesla. Today is packed with a ton of alpha. I'm really excited about this one. You don't want to miss it. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to The Trading Apologist. My name is Tom, and I hope you all had a lovely weekend. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help out the channel and helps get this out there to more people, and it means a lot to me personally. Now, before we dive in, we're going to start with a bit of fun, which is announcing the winner of the best roast joke from Friday to celebrate 1,000 subscribers. I have to hand it to you guys. You guys are clever. Some of the cartoon references were very cute. The Mr. Clean comparisons, I'm honestly not even mad at. I mean, he's strong. Presumably he has great hygiene. I think women like him. But the sheer quantity of conehead comments unlocked a level of self-consciousness in me that I did not know existed. I know I asked for it, but damn, you guys are cruel. Even the chemotherapy joke somehow seemed kinder in comparison. However, the clear winner with 4 times the likes of any other joke was Copycat2579, who combined the best of the Mr. Clean and the Conehead burns. So message me on xCopycat and I will send you that Solana. Well played. Moving on. First, we need to revisit the US's credit downgrade by Moody's from Friday. You know what? Self-consciousness be damned. But I didn't want to make too much of this in the last video because it's been on our radar for some time, and a lot of folks are saying the timing is just politically motivated, but I think we saw this lesser impact via how crypto responded over the weekend. And things that were actually more shaken on Sunday by Scott Bessent saying that spending won't be cut and that we need to grow our way out of this debt problem by increasing GDP. That's a whole other conversation. While I think that's a good goal to grow GDP, it's going to take some time. So back to the credit downgrade. I'm bringing it back up because the notable thing to me is that the global reserve asset, the US dollar, isn't considered prime anymore. That's a problem because if we can't rein in our spending, the US dollar is heading to junk status over enough time. That's why I think we saw more of that violent reaction on Sunday when Bessent was saying that we aren't going to rein in spending in the near term. Now, what's even more alarming is that now US treasuries are deemed riskier than every European treasury, even Greece. Today, Greece was 57 and the US was 58. Yes, we're talking about the benchmark treasury of the world in that 58th position. In terms of other signs that signal a bit of caution, the 10-year and 30-year yield are still very elevated. They came off a little bit today, but they're still historically quite high, and there is more quiet QE going on by the Fed in the background. The Fed isn't cutting rates, but this stealth QE action is letting you know that they know that there's a problem. But the silver lining for us, all of this might play in really well for a digital store value that we like to talk about a lot here. And there doesn't seem to be any near-term slowdown to global liquidity, so that inflow into digital and analog gold should continue. However, just so we can plan for any potential scenario, I did go back in the charts to see how markets reacted at previous US credit downgrades. Now, markets generally tend to move in 30, 60, 90, 120-day cycles. And if we look back to the 2011 US credit downgrade, we see roughly a 60-day correction. In 2023, we saw almost a 90-day correction. However, given the muted market reaction we have currently, if we do see any correction at all, I suspect it wouldn't exceed the 30-day mark, especially given the momentum we're seeing currently in markets. And again, I don't think that would extend to Bitcoin in the same way. But if we do look at what Bitcoin did in 2023, during that same 90-day correction, you can see that Bitcoin bottomed and recovered much faster. The tailwinds now for Bitcoin are much greater than they were in 2023, so I would anticipate even less of a reaction now, and perhaps Bitcoin may even rally if things get worse on this front, similar to what we saw Bitcoin do in early 2023 when we had the US banking crisis. As they always say, Bitcoin loves a crisis. Okay, we're going to skip the Forex factory calendar today, with the only thing this week really being the flash manufacturing PMI on Thursday. There are also some earnings still reporting this week, but nothing of note that would really impact markets or nothing that we follow here. For equities, we're still sitting in neutral on the fear and greed, which is notable given the size of the rally we've had. I would have anticipated that we would be in greed by now, but sitting in neutral is a good place to be. Also on Friday, the United Healthcare CEO bought the dip with a $25 million purchase of UNH stock. I think somebody knew something because it quickly bounced from $250 a share to back over $300 today. I still want to do a full breakdown on this because it's just dirty, dirty, dirty. So let's talk about pair trading. Today I'm going to be looking at the MicroStrategy and Tesla pair trade chart. If you are in the Invest Answers community and you go on the Discourse channel, there's a spreadsheet in there where folks have tried all kinds of different pairs. So there's plenty of information and backtests there for you to check out. Now, when you're pair trading, you're generally looking for volatile assets that aren't correlated. So when one's going up, the other's going down, and you can swap back and forth and take advantage of that inverse correlation and volatility. You're looking also for assets that you believe in and don't mind holding even through a downturn, since the aim is to swap back and forth between the two to grow your overall holdings of each asset. And the last thing I'll mention is that this is best done in a tax-free retirement account because you are trading a lot, and if you're doing a ton of this swapping, the short-term capital gains will just eat into your profits and don't make the strategy as worthwhile. So let's dive into the charts. Okay, here we are on the charts, and in terms of the ticker, I'm pulling up MicroStrategy MSTR divided by Tesla, TSLA. So it's one asset compared to the other, and you can see instead of price, you get these ratios on the right here. And if we're at a 1.0 ratio, it means both assets are exactly the same price. If we are at a higher ratio of, say, a 1.5 that we almost got to, it means that for every MicroStrategy share you sell, you get 1.5 shares of Tesla. The flip side is true. If we're down here, then Tesla is more valuable than MicroStrategy, and it's time to sell that Tesla and buy MicroStrategy. So for this setup, I really am just using the confluence model from IADSS, and I have the trend model turned on as well with that blue and orange to identify the trend. And then I also, at the bottom, I have mean reversion, and I like to add RSI too, just to give me a little bit more edge on these flips, because you can see that you often get multiple buy and sell signals on the chart, and they often aren't totally accurate to the peak, or you're getting multiple ones on the way down. So I think looking at the last couple of weeks is a great example here of how you play this. So down here, we flipped from Tesla into MicroStrategy as we were recovering out of that early April market dip. And we can see that MicroStrategy outran Tesla, and you see that increase in value here. And when you're getting that sell signal, that's your sign to flip back into Tesla right here. And you don't always get a buy signal to make that swap again. So sometimes you would be stuck riding this out all the way up and then continuing that trend. But that's why I bring up RSI, because whenever RSI gets below 30 or above 70, that's my signal to pay attention. And so I'm not just looking for these sell signals or these buy signals. I'm looking for that mean reversion spike with a sell signal or a buy signal, for RSI to be spiked above 70 or below 30. And I'm looking for at least two of those to tell me that, hey, it might be time to make a swap. And then when I see that trend turn here, I'm forcing myself to make that swap because the trend changes even though I didn't get that green buy signal. We had a very clear peak here where it was time to switch back into Tesla, and that was on May 8th, just a few days ago. So we see that signal, we have the mean reversion spike, RSI is spiked, and once the trend flips right here, that's your sign to swap from MicroStrategy into Tesla, and you ride this all the way down. And you're starting to get these buy signals here, which is telling you that the price action is aggressive and the signals are firing for this to be a swap, but the trend is still down. So even though you're getting all these signals and RSI is way oversold, you're waiting. And actually just Friday and then the rest today, I made this swap back from Tesla into MicroStrategy. So I was waiting for that trend flip right here. And I acted a little bit preemptively on Friday because it just looked like it was starting to turn. So I made my first swap at 1.16. The others were today at 1.18. It kept running into the end of the day, and I'm just looking for maybe a little pullback if I'll get lucky to swap the rest of that at the best rate possible. So I'm doing this on the 1 hour time frame, so there are more swaps and trades happening. So it's a little bit more active, but it helps you really maximize all of these swings. A lot of folks like to just work on the 4 hour time frame, and that's totally fine too, but you can see on the 4 hour, you might not be quite as active in your trading, and maybe on the 4 hour, you're getting this buy signal and you're just playing this one big move all the way up and then this swing back down. And then again, you're not getting a buy signal there. So this is why this takes a bit of discretion. But even on the 4 hour, you can see this is why I add the RSI, which not a lot of people do. But that spike above 70 right here on the peak. And then at this bottom here, it didn't nail the bottom exactly, but you got that RSI below 30. When you then see the trend change, that's a signal to me that it's time to make the swap, even if I'm not getting the signal there. So again, confluence model, IADSS on neutral, and we're just looking for those trend changes to make those swaps between the two assets and grow our bags. And this can be quite lucrative. I was talking to Mopbot, and I think she was saying since this peak here, or maybe down here, she doubled her MicroStrategy bag just in a couple of months. So you can see how this can be a quite powerful way to grow your holdings of those two assets or whatever pair you might happen to be trading. I have the back test on here so I can see my ROI, but again, I'm not acting on every one of these buy and sell signals. I'm using a bit more discretion and I'm integrating RSI, and this is a bit more advanced, but I even have RSI lines drawn at just about 38 and at 60 that are telling me that there are some points of rejection where the trend might not flip yet, but once it breaks through, that's a sign that we're flipping the trend. The 50% level is also important, but that's a bit more advanced and nuanced and a conversation for another time. If you do want to learn more about this, Mopbots and Jacob Trades are both great teachers, and I have put their Calendly links down in the description below. Okay, moving over to Bitcoin, I'm just going to show you this very simple but oh so powerful trick on the RSI on the weekly time frame that I use to determine every breakout from a consolidation range, and I also use it to determine if we're still in the bull run or not. I can't believe that not more people know about this, but I'm going to share it with you now, so keep it in your back pockets, mark the levels up on your charts. I promise it will change your trading of crypto. Okay, starting on the weekly time frame for Bitcoin, and I have all of our price action pulled up from the bottom of the bear market from October, November of 2022, all the way up to present day where we're hoping to break into new all-time highs. Wouldn't that be nice? So the only thing I'm using right now is the RSI on the weekly time frame. And what I want to determine is when are we going to break out right here? When are we going to break out right here? And after our last correction, when are we going to break out right here? So these are the three zones that I am interested in. So the first thing I want to determine via the RSI is the very simple question of, are we in a bull market or a bear market? And on the weekly RSI, you'll find if you draw a horizontal line right here at 44 or 44.75 on the RSI, but you can see how this plays a very nice dividing line between our general bear market. Yeah, we peaked above here, but generally below 44, we're in a bear market, and above 44 on the weekly RSI, we're in a bull market. So honestly, this correction here, I got concerned on this one weekly candle close at the very bottom because we just peaked our head below it slightly, and then we bounced back up. So I was honestly sweating a little bit there, and I thought this might be a worse correction, but we recovered and I entered more that following week as I saw that weekly RSI was turning around. So very simple level there, 44, helps you determine bull market versus the bear market. The other level that I like to mark horizontally, which isn't as important as the 44, but is still a nice visual indicator, is this roughly 62 level right here. And what 62 identifies on the RSI, you can see how that's a dividing line in the price action again. And anything above 62 generally signals a more explosive period in the price action. So here in 2023, we were just recovering, but this was the banking crisis and Bitcoin exploded out of that. And that was, I would say, the most euphoric move in 2023. And then we went back below 62 for a bit of consolidation before we broke out. And then as we had this big rally here, we were above 62 for all of this great price action. Then we went into our 8 months of consolidation, which was again underneath 62. And then we broke out again into December, January. And once we were under 62, you can see right there after the inauguration, then we were back into consolidation and we just peaked our head above that again. So I'm anticipating more exciting price action ahead. Okay, horizontal lines, but how do we determine these exact moments when it is going to cross? Well, it's actually more simple than you think. And we've demonstrated this on the daily with underside support when RSI is ticking up on the daily, and as soon as that underside support breaks down, it tells you momentum is coming out of the moves. Well, the opposite also works for the upside and breaking that resistance to get into new highs. So I'm just going to draw line 1. We'll draw line 2 right here, and then we'll draw line 3 right here. And you can see just this simple trick of drawing this downtrending resistance. And let me zoom in a little bit just so we can really amplify this point. Downtrending resistance in 2023 as we're consolidating. The week we break out right here from this downtrending resistance is the week right before we start this parabolic move up. And then we continue to break down and correct for that 8-month period. God, everybody remember how painful that was? And right here on the week we break through is the week we start breaking up from this final bottom. We did on the yen carry trade low have a wick lower here. So this didn't catch the Pico bottom necessarily, but it did catch the breakout of the consolidation range. And if you're looking to really fine tune those Pico bottom entries, then that's why you would have IADSS up on the 4-hour, and that gave you a near perfect buy signal right there between the buy indicator, mean reversion, and the trend flipping. And then again here, December into January, RSI is moving down on the weekly, and the week we break out right there is the exact bottom when we have that 90-day tariff pause pump. So you can see how just this simple indicator of staying above 44 to determine that we're still in the bull market and breaking this downtrending resistance can be very powerful to help you position. And again, it won't nail the exact day or the exact low that week, but that's why you zoom in to those smaller time frames, to the daily and then to the 4-hour to really nail those Pico bottom entries. Now, the last two things I want to add is that this, of course, can apply to all crypto, but I like to chart it on Bitcoin, and then I just carry that analysis over to Solana or any other crypto that I'm charting, because I know when momentum is coming back into Bitcoin, the alts generally tend to follow. You can also look at the USDT dominance chart to determine if money is flowing out of USDT and back into crypto. That can be another sign of confluence that there is momentum behind this move and the money flows are shifting from that stable coin back into crypto. The one word of warning I want to give you guys, and I am not a bear by any means, but we need to keep our head out the window and be ready for any scenario that we might face, is that between the highs of last year and then the highs in December into January, we are forming a bit of bearish divergence on the weekly RSI. So we've talked about this on the daily time frame. Basically, when the price continues higher, but the RSI is printing lower highs, that's a sign of not as much momentum behind the trade and a bit of exhaustion. And this is on a very long-term time frame. So we might not see the impacts of this for months and months to come. But what I'm looking at for here on the weekly RSI, as this starts to trend up, I'm hoping we're breaking our short-term consolidation range here to the upside. Once we intersect this line, if we break through this line, that is a fantastic sign. All systems go. We're going to keep rocketing up to new high prices. If we reject from this line, I don't know what the event is going to be that may cause this, but that's a sign to me to potentially get out of some of your positions because we're most likely going to see more of a correction. So anyway, I don't mean that at all to scare you guys, but we do just need to prepare ourselves for all the potential outcomes. And what this does, it gives you something to look out for and something to react to make the wisest investment decision possible. So I hope that was helpful. And while we're here, let's just go in on the 1 hour time frame to assess this consolidation range and what we think is going to happen. And the one thing I did not like yesterday is that once we had this range breakout yesterday evening, we had this rally up, and then we had Besant speaking, and we had a bit of a pullback, and then we had this rally into the close, and then this sharp snapback into the range. That is often a sign for me that we're printing a local top. Not that anything is over in terms of the bull run, but that we might just need to correct a little bit longer or test lower prices down below. Now, what was a good sign of strength for me was that today we were able to rally back up, and we have the daily close in about 20 minutes. So it looks like we're most likely going to close above that breakout area. Really, if we were closing above this 1 wick, that would be an even stronger sign. So let's see what we can do in the next 20 minutes. But the other thing that's telling me that there's strength in the move right now is that when we did come back down, even though it was a violent rejection, we are printing lower highs. So the lower highs, when we came back into the zone, as well as getting back above it quickly today and hopefully closing above it on the daily, is all a good sign for continued price action to the upside. If we are considering corrections down to the downside, we have been talking about 98,000 being a target with a lot of historical volume and trading support. And wouldn't you know it, this previous peak right here is sitting right below 98,000. So that would be a support target for me right there. And at the very most, I really wouldn't want to see the correction go much past 92,500, which is right around these bottoms here, actually just a little bit below. So those would be the lines in the sand for me for any correction. Anything beyond 92,500 would be cause for a bit more consideration of if we're still in an uptrend. But ideally, we just keep moving away from here, or if we do have a correction, we find support at that 98 number. We might even find support at that psychological 100,000 number right there. If we do, for some reason, get a correction, what you guys can look out for is something like an A, B, C style correction. That's a common correction pattern we'll see, and then we'll bounce away from support. The benefit of that too is that it will just allow the charts to cool off a little bit. It will build structure for us. And it gives us potential for more of a move to the upside. The last thing I want to mention on Bitcoin is that I just have a date marked in on my normal Bitcoin chart. This is kind of the empty one, which I have on May 26th right here. And the reason I have that marked is because May 26th, if we go out to the daily, is 120 days from our last top right here on Monday, January 20th. And as we talked about earlier in today's video about things moving in those 30, 60, 90, 120 day cycles, it's not guaranteed that something is going to happen on that day. But as we get close to them, I just like to have them marked because it could signal a potential change in trend. If we are looking from an Elliott wave perspective, and again, this isn't drawn to scale, but if you have a wave 1, corrective wave 2, wave 3, corrective wave 4, and then a wave 5 into that date, then it would make sense that we would see that A, B, C correction. Maybe we retest these old tops around here as support, and then we continue moving up from there. So no guarantees, but just something I'm thinking about to formulate my thesis of what could happen in the market. Okay, last thing. I just looked at my notes, and we are now entering a 6th week in this uptrend. And if we look back in history, if you measure all these uptrends, most of them have been 6, 7, or 8 weeks max. So that's another signal to me that historically we just haven't seen big extended long moves like this without some kind of break. And that in conjunction with this date could tell me, okay, we can have another week or maybe 2 weeks up, but we should see some kind of little correction. In this big move here, you're going to say, well, Tom, that's clearly more than 6 weeks, but we had like 8 weeks and then consolidation and then another 1, 2, 3, 4, 5, 6 weeks into that peak right there. So these are all just little things that over time, as you look at the charts, you'll get familiar with, but they help you piece together a picture of what most probably will happen. Okay, so let's get into the charts, and we are going to do a bit of the lightning round. Starting on the S&P 500, you can see how we opened lower after that pullback over the weekend on the US credit downgrade, but the market really shook it off and ground its way up all day, almost closing into the highs of the day, but making fresh highs for this rebound. I think we should just recap what support we do have below if we do see a correction. We have this gap fill here at just about 5,700, but most probably we would find that 200 DMA at 5,760. It's moving up a little bit, so let's say maybe it intersects at 5,790 by the time we would come down to test it, would most probably provide support. And these moving averages tend to act as a bit of a magnet in the market. And also when they're broken, they usually get retested for a back test. So I'm looking at that if we have any kind of correction. If we do have a severe correction for some unknown reason right now, but who knows what's going to happen, it's a wild world, 5,300 would be our line in the sand. Okay, moving over to the NASDAQ, you can see very similar chart. We opened lower and then we just broke above the highs from Friday. Below we have support by the 200-day moving average, which right now would be roughly at about 20,300 by this past line of support, but depending on if and when we intersect that, it would most likely move higher. So maybe 20,500 would be the first level of support. And then we have this gap fill way down here at 18,500 for round numbers, which I wouldn't with any bigger correction want to see anything go below that. Okay, if we just look really briefly at the DXY, it continued to break down today and then bounced up a little bit in the latter half of the day. And the other thing that is breaking down further is natural gas. And this has been a great trade for me. I'm quite happy with this one. We're into the most traded zone today. So I unloaded about 20% of my position on Friday. I unloaded a little bit more today just to see if we get any resistance here. And I'm still hoping for that further breakdown, but I'm just scaling out of it because of how volatile this one can be. If we look at gold, and the only reason I want to look at this is just because it's a barometer on the market for us. If something happens that would cause stocks to sell off, we would see the gold price most likely spike back up. But right now we're finding support at that 3,200. And if we break down from this level, it means stocks are continuing to rally and anticipated support is at 3,000. Okay, moving on to Solana quickly. And you can see in the consolidation here and the sell-off yesterday, Solana has been weaker than Bitcoin. So I just want to give this a quick look to give us levels overhead and down below to look out for support and resistance. The point of resistance is this major 50% level at $195. That hasn't changed since our last video. And if we look down below, we would anticipate some support here at $157 at this past peak. That also, if you look at the liquidation heat maps, lines up with where there's a bit of past liquidity. Okay, the other thing I want to draw in just from the start of the bull market roughly is this line of support and resistance that we've had the whole way through here. And if we zoom in, you can see how it played a bit of support and then resistance, and we finally broke through. If we were to come back to back test that right now, that would be right about at that $157 level. So that's the other reason that I'm saying that's a strong area of support. If we broke anywhere below, say 140 at these swing lows right here, that would be a major cause of concern of just the overall chart structure breaking down. Okay, one more we have to look at because it hit our price target last week of that $62 is Robinhood. So I took 20% of my position off on Friday because that price target was hit. Also, our daily RSI was starting to get to the top end of the range. It's a very steep support line on the daily RSI, but as soon as this breaks, I know that a bit of momentum is coming out of the trade. But I still think Hood has more to run. So how am I determining where price could potentially go to? So what I did is I like to do some just price and time analysis by taking the length and the price of this run right here, and then I place it to the bottom of this move. And so this gives me a general trajectory of any move up as the bull market continues. I want it to be as fast, if not faster, in getting to that price target of $82. And now this is new all-time high, blue sky breakouts. How do we determine that? Well, we can project off of this. We can also take this move and you can do extensions of this to the 150%, which would put us up here at 109. And you can go to the 200% extension beyond that to determine where things might go. And the other thing I wanted to bring up just for a bit of confluence, and I haven't brought this up before, but there's a thing called the Invest Answers or the IA profit taking model. And I have this set to neutral. Normally for assets that run very quickly like this, you can set it on aggressive. But on neutral, I found, hey, it hit the level we're getting into right now as things are starting to look overbought. And it happened to line up on level 7 perfectly with this price and time extension from the first move up in the bull market. You set the start date of this profit taking model to where we crossed through the 200-day moving average. So I set it right there on April 8th. And it will give you all your levels here for profit taking. There's a nice table too that I have turned off. It's not really the time to do a full demo on this, but it's nice because it can help you layer out and provide targets. And anything above level 6 is an area where you start taking profits little by little. So I did that preemptively last week, just taking a little bit off the top. If hood pulls back a little bit and we find support at, say, that $55 level or that low $50 level right here at level 3, I would most likely add to my position again and try to ride that up to level 7. And then beyond that, it's anybody's guess, and we just have to see what the market conditions are like at the time. But congratulations to anyone who took that trade off the bottom with me for hood. That was a nice 60% or so return in a few weeks. Okay, very last one, which is NBIS, which was a request from Taluka Blake, who's gotten shout outs for 2 videos in a row. So congratulations. So right now we've had a pretty decent recovery off the bottom. This is an AI play. So they make AI software for robotics, for aircraft, drones, all kinds of stuff. So they are kind of in vogue right now, getting some government contracts, but they do have some headwinds in terms of more competition in the space, but they do seem promising, at least for the near term, with some of the contracts they've landed. And you can see that recovery here. And the question is, would we buy this right now? Well, I'm just going to draw our fib levels to see where support and resistance is. And you can see we are just into that 618 resistance. And we did break above the 200-day moving average, and now we're kind of consolidating between the two. So maybe this cools off for a little bit. If it finds support from the 200-day moving average and continues away, it could be worth a play. It used to have highs back here at $87. We're only at $37 right now. I mean, some of the very low lows were at $13. So there is a lot left to run in it. Again, it wouldn't be a long-term hold for me. It would be more of a swing play, but given where it is right now, mean reversion on the daily is heading to the top of the range. It hasn't printed a sell signal, but also the daily RSI is really overheated. So it is one I'm keeping my eye on, Blake, but it's not a buy for me right now. The risk of a pullback right now is too high, and I would just want to see the charts cool off a little bit on the daily or on the 4-hour. Let's just look at the 4-hour RSI. So yeah, the 4-hour RSI is giving us a clear uptrend right here. We can just draw that in like that. So I assume, if we find support on the 4-hour and bounce away, we might head to the top of the range here at $54. But if we break down, then I would just be scouting this RSI to get to the bottom half of the range. Sometimes when things are in a strong uptrend, you may not get all the way to the bottom of the range. So in that instance, what you can do is you can draw downtrending RSI resistance, just as an example right now, assuming this continues down. And if we don't head to the bottom of the range, as soon as that 4-hour RSI breaks up, that's your signal that we're going to go on to the next leg of the move. So Blake, I hope that is helpful. Okay, so that's everything for the charts today. It was a meaty one. I really hope you guys found those lessons to be helpful. Make sure you keep those levels on the weekly Bitcoin RSI marked up on your charts. They are such a wonderful indicator and will really help you get an edge in markets, and will also help give you confidence on those entries. Because I know how it is sometimes. The market's pulling back for weeks on end, and you're thinking, gosh, is this the end? Are we going into a new bear market? Well, now you have a little tool in your pocket that you can use to give yourself confidence that no, this isn't over. We're still above that 44 level. We're in a bull market, and we're breaking out of this weekly RSI downtrend, and we're going to see more upside. I'm going to do more of that kind of educational content because I know you guys really love that. But if you have any requests between now and Friday, either on the education front, charts you would like to see, or if you just want to leave a comment for fun down below, I love all of those. I respond to them as soon as I'm able. I'll see you guys on Friday. Bye for now.